Dow and the S&P 500 coming off of their biggest two-day gain since August. We're expecting some fractional losses at the open. Todd, Joe, final thoughts here. I know that you were first in thinking that this was an asset bubble, or among the first. Do you still see this as an asset bubble?
And growing. Yeah, I think it's a very big asset bubble, and I think that it's being helped by everybody's actions. Our Federal Reserve, central banks around the world. We've seen what China's tried to do the last, month or so. I mean, every day it's pumping in more, and eventually, you run out.
Yeah, the intervention from the central bank and from the government of China, Joe, hasn't that taken some of the glow off of investing in China, seeing that this is totally manipulated?
Yes, it definitely seems to be the case, mostly because the actions have been so inconsistent and yanking back and forth of how they want to deal with their stock market, how they plan to deal with their central bank, and how consumers will actually end up being boosted in their per capita GDP to spend more to drive that consumer economy. So it's been such a wild ride this summer. We've been talking about it all summer, and it just strikes me as our previous guest was saying, a lack of clarity going into this very important state visit where it's not just the economy, it's cybersecurity also on the table.
Cybersecurity is a big deal there. And I know that the volatility has been incredible in China, but also here, Todd. So you want to sell into this market? What do you want to do as an investor?
I think you want to sell into it. I think it was interesting because the markets, we just had a very big rally the last 2 days coming into this. So I asked the question, how many bullets do the bulls have left now? Because even if they say no rate, which is what they're looking for, how much do they have left to buy? I mean, we're in a market that certainly has turned the corner to the downward side right now. Not drastically, right? We're not blowing up. It's not going to collapse. But we've certainly seen a lot more pressure, and it's now become more of a sell the rally, sell in the strength kind of market. I think if the market shows any strength after the announcement, I think you really want to sell into it. Or I think
sell into the rally. You spoke with Carl Icahn yesterday, Joe. What did he say?
And he says we are in this asset bubble. We need to get out. Rates need to go up now, sooner rather than later. But he also said, look, the Fed did a good job saving the economy in 2008. So he's not against the Fed. He just thinks that they need to act really
Did they really do a good job?
That's a quote from Carl Icahn.
I mean, what do you think? I'm just curious. I could never make up my mind.
Free money does not create jobs. However, pushing money into riskier assets like stocks sends the market higher and does help on confidence. People feel richer. They tend to act that way.
Okay, but when you see like the spending, I mean, look at retail sales have been brutal for years. We keep talking about reasons why it should be better, but it hadn't been better.
No.
So the average guy, the guy working in the street, he's not caring about the stock market.
But you can't blame the Fed for that. You have to blame the leaders in Washington because the fact is. Because the fact is we needed fiscal policy.
Where's Waldo?
What happened to the tax reform? And by the way, what happened to the Republicans saying that they were going to get so much done when they took over in November? And this is why Donald Trump and outsiders are resonating, because we haven't seen any.
That's exactly what Carl Icahn told me yesterday, too. He said, this guy has struck a nerve, and also everyone outside of the bureaucracy of politics. And he himself, this billionaire investor, whatever you think about him, he wants an outsider in office as well. So you can imagine that sort of maybe reflects what some of the business community is.
I don't blame the Fed for where we are in this economy. I mean, I blame leaders who haven't.
I agree with you. I only blame the Fed because they let it go on too long and they should have raised sooner.
Todd Horwitz, always good to see you. Joe Can't see you later in the show. Next hour, we are joined by Wall Street Journal's chief economics correspondent John Hilsenrath and California Congressman Darrell Issa. Join us for those interviews coming up. Back in a moment.